welcome back to another video, and I am going to go over something called the HEFT ETF. So this is the Hedgeye Fourth Turning ETF. This is an ETF made in partnership with an asset management company by the author of the Fourth Turning. So if you go over to my Substack here, you can actually see, scroll down just a little bit, there's an article that I wrote. I'll link it in the description down below. This is called Investing During a Fourth Turning. This is super important and going to be really interesting. I'll walk you through this article, but I'll also kind of go through some things on their website, some of the things that I didn't get to do on the article itself, because, you know, I'm just describing things for you here in the article. One of the things I do want to mention before we get started is the Cash Collector Wealth Protector free online webinar that I'm putting on. So I've decided on a date. This is March 26th, 7 p.m. It's going to be a online video call that you can join if you're a subscriber of my Substack. Whether you're on the free tier or the paid tier, you're going to be able to join this and you'll get the webinar link. This is a free webinar that I'm putting on. We're going to go over a number of different things, like, for example, how to structure a portfolio during the market cycle that we're currently in, how to actually allocate capital during to different types of investments, and also how to apply swing trades and be a little bit of more tactical. I think that's the key thing that HEFT is going to probably do a really good job at, is being a little bit more tactical. It's not like a buy and hold type of strategy that they have. We'll get into the strategy in a moment here, but this is going to be really key to get a grasp of. These are the things that I send trade notifications out to my paid subscribers, discussing trades with my subscribers, and this is going to be so key into the future, especially over the course of the last little while, where the S&P 500 have just been crashing really and coming down ever so slightly. I've been able to generate a little bit of profit using some of the swing trade methodologies that we're going to be talking about in the Cash Collector Wealth Protector free online webinar. There will be a recording if you are a paid subscriber. So if you're listening and you're a paid subscriber of my Substack, that's going to be available for you. So you don't have to join the call, but it is going to be interesting. We'll try and get we'll do a little bit of a Q&A for people who are on the live call there. So that is Cash Collector Wealth Protector free online webinar. The link is down in the description if you want to read this article and get a little bit more information about the webinar itself. So let's talk about the Hedgeye Fourth Turning ETF. This is a super interesting ETF, and I think we've got to just take a step back here and go over what is the fourth turning, because what I don't think a lot of people will understand is that book by Neil Howe, The Fourth Turning Is Here. This is an amazing book. So there was an original book called The Fourth Turning, and this was a book that was actually put out in the 90s, which is pretty crazy to think about. And what was so amazing in that book is it goes through these different cycles that play out over the course of about 100 years. Neil Howe called it like a seculum, right? So there's the first turning, the second, the third, and the fourth, right? So the first is a rebirth, right? We just went through the fourth turning, which is the most kind of crazy time period that you'll go through this 100-year cycle. But the first turning is always that rebirth. It's a period of growth where you're trying to rebuild after that fourth turning, whatever happens in that fourth turning. Usually it's some sort of like war, financial crisis, could be a number of different things all at the same time. During this fourth turning, we essentially experienced a pandemic, where we just declared war on Iran, and we're going to go through a number of different crises during this fourth turning, and that's what it talks about in the book. But that first turning is that rebirth. So you have the crisis, then a rebirth, and then a second turning is like a cultural shift. So think about like the rebel hippies back in the day, right? Then there's that institutional awakening. That's the third turning. This is like, for example, large corporations get built, large governments just become larger, and essentially like the excuse me, the difference between the wealth gap gets larger, right? So the poor get poorer, the wealthy get wealthier. You lead up to that crisis. Generally, the crisis is going to start maybe even with a stock crash. That's what happened in 1929. That was the last fourth turning. And then that led into the Great Depression. So then there's that crisis scenario that usually has a number of different things on top of that. And then you start it all over again. So that's kind of, in a nutshell, what the fourth turning actually is. But the fourth turning is where we are right now. Hence the name of the book. The fourth turning is here, just recently released and announced in 2023. Like I said, great read. What was amazing about the first book, though, is it actually predicted the 2008 crisis. Now, it didn't say it was going to be a housing crisis, but it predicted that year from 2006 to 2008, there is going to be some sort of crisis, and that is going to kick off the next fourth turning. And that fourth turning that we're currently in right now, that this is going to come to some sort of crescendo in 2029 to 2031. So that is the dates that are predicted in the fourth turning is here. And I think it actually was mentioned in the fourth turning as well. So pretty unbelievable, and it just walks you through that timeline. Now, the Hedgeye Fourth Turning ETF, this is designed to essentially profit off of whatever is going to happen in the fourth turning. So this is an actively managed ETF built for what the creators try and do, and that is generate a real return for people. So in the article, I give a really good example here. This is on the Investing During a Fourth Turning article. Scroll down just a little bit and you'll find this little paragraph here, and it says this is like a short lesson on what is a real return. So if inflation is 2% and the asset that you're actually holding does 0% on the year, then your real return is -2. So if inflation is 4% and you've chosen an asset that appreciates by 2% on the year, then your real return is actually -2, because inflation wasn't, it was running higher than what your asset actually appreciated by. This is the perfect example of real return, and nobody ever does this in the housing market. Somebody might say, oh, my house went up like $100,000, but they don't actually account for the decline in the currency. And I give the example here. If your house lost 30% of its value over the last 5 years, which it did in Canada, and inflation was also 30%, which it was in Canada, over the last 5 years, your home has actually lost 60% of the value adjusted for inflation. And this is actually happening in Canada right now. Inflation is a killer of your wealth. And this is the best example that people never account for. They always talk about how the price of their house just always go up. But meanwhile, the inflation during some periods of time has actually gone up way more than the price of your house. So great example and an easy way to understand what is a real return. So that is the whole goal of the HEFT ETF. So they don't care about like the S&P 500. All they're doing is trying to figure out how to actually generate a real return for inflation after inflation is considered, they're taken into effect here. So this is an awesome way to really think about just generating and creating and keeping wealth. I think it's really, we're entering into a period where this whole buy and hold kind of idea, I think it's going away. And I think there's going to be a period where the S&P 500 is going to decline for an extended period of time, and it's going to stay low for a long period of time while inflation is actually running quite hot. And I don't think we're going to actually make an all-time high on the S&P 500 for quite some time. Now, I'm not saying like that's going to happen right this second, because, money printers could turn on in like a month and like, we could just go to the moon on the S&P 500. But over the course of all of the turnings, we've definitely seen periods of time where valuations just got so extended, and then the S&P 500 would trade sideways for a period of time. But meanwhile, inflation is still creeping up, right? So that's what I like about the HEFT ETF. I want to describe what they what they actually do. So in the article here, you can see most of the holdings that they actually have are actually commodities itself. So direct exposure to commodities. They're looking at inflation sensitive assets. This is the whole theme of the fourth turning. When you go into a war, when you go into essentially a currency crisis, that is one of the options that is on the table, or on the menu, I guess you could say, for a fourth turning. If you're going into any of those situations, you definitely do not want to be holding cash. And the HEFT ETF tries to maneuver itself through these different cycles. And one of the ways that it's going to do that is by owning commodities and inflation-sensitive assets. It's also going to hold defensive treasury bond exposures. This is great for when the market is actually coming down and interest rates are coming down as well. There's going to be periods of time, like think about the 70s. This is the best example that we've seen where inflation was just so rampant. But if you expected your house to hold its value, the house absolutely got crushed in terms of like the real return, because yeah, sure, the house may have risen in price, but also interest rates went up in price as well. And that just absolutely smoked the housing market. And the 80s was a great time to buy a house. So that's what they try to be defensive during certain during certain points in time. They also allocate to sectors positioned to benefit from the structural change that they talk about in the book. The fourth turning is here, and just the fourth turning in general. There are definitely some themes that they talk about in the book. Like, for example, they cannot get away from talking about gold in the fourth turning is here. They have exposure to gold in the HEFT ETF. I'll show you that in a moment. But one of the things that I really like, and one of the things that makes this HEFT ETF so appealing to somebody like myself, even though I consider myself to be an active manager of capital, I really like having somebody to manage a short portion of a portfolio. So, for example, if things are going down, you can step out of the way and avoid the crash as the best of your abilities, right? But having the ability to have somebody who is proficient in shorting stocks as they come down, you are going to profit. That's really key. And that's one of the big reasons why I would be interested in holding the HEFT ETF myself. Not at this moment in time. We'll talk about that in a moment. But that is one of the things that interests me the most. So you can actually go to the Hedgeye Asset Management website and look up the HEFT ETF here. This is going to tell you some really key information. So there's the ticker. The primary exchange is going to be the New York Stock Exchange. So you're going to be buying this in US dollars. If you're Canadian and following me, then you're going to want to convert your money over to American dollars to actually take advantage of this ETF. You could also see the net assets and then the expense ratio. This is really important to understand. This right here is 0.07%. So you will pay a fee for this ETF to manage your money. And it's going to, it doesn't actually distribute a dividend right now, but if they do change that, it will be on an annual basis as well. So that's some key information. But one of the things that I like, if you scroll down on the HEFT page here, you can actually see their net asset value. So when this gets extended to what they actually hold, then you might want to actually peel some money off the table. And when this becomes undervalued, this is a signal that you could use to, to actually purchase the ETF. So this is a really key thing to understand. The net asset value, this is something that I'm going to be watching for sure. So it shows you their performance. What's really interesting, year to date in 2026, they are actually up 8.75%. That's a great return, especially considering the S&P 500 is like, what is it? It's actually like down right now. Just hopping over to the chart here. So this is my setup for the S&P 500. These are the levels that I've been watching. So from January, let's take it from, we're about even, I guess, on the S&P 500 year to date now. So about even, slightly, we were slightly higher, slightly off the highs here. This, I think, is only a couple percent. Let's just quickly measure this out while I'm on the page here. So yeah, this right here, down 2% off of the highs. Not a huge deal. Like I said, I'm not predicting that, we don't make all-time highs in the next couple months, but we're monitoring the levels on metals and momentum, that is for sure. Really cool to see 8.75% up on the year. That is a pretty amazing performance there. And I think we actually are around the same performance in my own portfolio too. So that's one of the reasons why I'm holding off right now. But this is kind of interesting right now. You can actually see this, and I believe I heard an interview and they said that they update this every 24 hours. So what are the actual top holdings in the HEFT ETF? Well, one of the top holdings right now, 22% of their weighting is in cash and what they call other. I don't know what exactly other means. The other things that I've noticed that are their top holdings are bonds, U.S. Treasury bonds. So you got the two-year U.S. Treasury bond in here. That's going to be 9% of the portfolio. This is what I was talking about. Here's their gold holdings, and they purchase gold using GLD. So they're not actually storing physical gold. They're buying the GLD fund there. So that's something to kind of keep in mind. You might want to, if you're considering buying the HEFT ETF, you might actually want some physical gold holdings on your own. So if you're allocating money to something like this, then that's something to know for sure. But then from there, it's pretty much like, other than all of their treasury bonds and stuff, it is just like all like defensive plays. So you got ExxonMobil. That's probably one of the reasons why they're up so greatly on the year. But it's only 2.3% of their portfolio. They've got Walmart listed as one of the top holdings here as well. So very defensive, blue chip, dividend paying kind of stocks. More bond ETFs, McDonald's, 1.95% of their holdings here. Dollar General. So again, these are very blue chip stocks. Waste Management, I think that actually is breaking out to all-time highs right now, 1.86%. So some interesting picks. And this is a lot like what my portfolio is actually made up of, except way less complicated than, having just one little stock like be 1.72% a portion of my portfolio. That's not how I like to do it. So, but I do think it's really interesting to look at their allocation of capital and actually see that update on a 24-hour period. So that's something we talk about in the article. So in the article, I listed out my performance from the past 6 months. So this does account for some of the yearly gains from last year. Looking at this company, the HEFT ETF was actually announced in November of 2025. So we can't compare the last 6 months performance here. Because they just started in November, but we can see the last 3 months is 8.05. Let's extend that out. If they were around, we could assume that their return would be about 16% or so, right? My performance over the last 6 months, we have 36% up in my most used portfolio, and then it goes down to my least used portfolio where I just have a couple bonds in that portfolio there. So spread out across the board, doing pretty well right now. For me, I don't think it actually makes sense to purchase HEFT, because the way that the portfolio is set up right now is very similar to my portfolio. And like I said, it's just way less complex. Now, for average retail investors, would I tell my dad or my mom to buy something like HEFT? Heck yeah. This makes a lot of sense. It's very easy. One of those things that you could just buy and hold over a longer period of time. Now, you have to expect that's not going to generate the nice gains that you might get from managing your portfolio on your own or with Metals and Momentum. That's me. For me, it doesn't make sense because I am doing pretty well on my own, but when we enter into a period where the market is just dropping dramatically, having exposure to an asset firm that can short stocks and do so responsibly, I think that makes a lot of sense. So one of the things that are going to be problems in the near future is going to be things like persistent inflation. We've definitely seen that over the last 5 years. Policy mistakes as well. This is going to be something that is just going to make investing in markets so much more rocky. And if you think about like the tariffs applied to all of the nations right now, and now it's being deemed illegal, and it's like, oh my goodness, that we're going back and forth. The market keeps going up and down. And that's how you start to get this sideways chop in the markets. And that's one of the reasons why I think it's actually better this year, I think, to be a swing trader than it is a long-term investor. Now, are there going to be some things that I want to hold for the long term? Absolutely. And it's probably going to be commodity focused. You could actually subscribe to my the Substack using the links down below, Metals and Momentum. It's $9 a month, and you can actually get trade notifications from me. This week is going to be a beautiful time trading because I guess this will be Friday when I post this. Next week, it'll be a great time to be a member of Metals and Momentum because I think I'm going to be actioning some trades that are coming to play right now. But that's one of the things that is just going to be a problem later on down the road. Having a sideways chop in the market allows you to it's a great time to be a swing trader in those types of markets. The other key thing that's going to probably come down the road is debt restructuring. Now, we're actually already talking about this right now in the US. Right now, President Trump is discussing how they should change the price of gold on their balance sheet to match the current market rate. And all this is going to do is allow the government to spend more and more, right? So they're going to unlock some of those the savings that they have in their gold holdings by marking that to the current market rate, and that's going to increase the size of the United States balance sheet. And that is a period where you might actually want to get a little bit more aggressive into the stocks that you're looking into. And that's one of the things that we're watching for sure on Metals and Momentum. And I'm sure HEFT will also adjust their portfolio once that comes into play, right? There's going to be a period in time in the future where I think actually we're going to revalue gold much higher than the current market rate. We're actually going to devalue the currency a lot more. And my current price target on gold is 22,000, but this is a moving target for myself and what I think the max upside to gold actually is. I did this whole calculation on how to get the $22,000 price target that I have on gold. I did this a year ago, and it was 21,200. Now it's 22,200. So to be a little bit more exact. And this is a moving target. So that is going to cause volatility in the market. That's going to cause major swings to the upside, but also major swings to the downside at the same time. Because when you devalue the currency, you're going to have to adjust interest rates. And if interest rates are rising, then there's going to be assets that go up, and there's going to be assets that go down. So it's going to be tricky to start to pick the winners in the coming years for sure. We've talked about market volatility and such. And what I thought was so funny in the book, The Fourth Turning is it talks about how the millennials are actually deemed the hero. And it explains in the book that parents should actually help their children, guide their children into the natural roles that the turnings actually show you. And he walks you through each turning and what generally the psychology of the people growing up in those turnings are actually like. So I think this is such an interesting book. It's a book that I'm going to probably read more than once, twice, maybe more than 3 times. It was amazing. If you haven't read the book, you have to get your hands on this, and then look at the HEFT ETF. Hopefully I've given you a good introduction as to what you should be looking for when looking at the HEFT ETF. Like I said, doesn't really make sense for me at this moment in time, but I was looking at the chart, and I've got it on a watch list here, and it almost broke out right up here. So I was watching this and I'm like, this could be interesting for a swing trade, and I'll probably will swing trade this here and there throughout the year, depending on the market conditions. Right now, like I said, I think it's a great time to be a swing trader, and that is so important. So if you're looking to learn more about investing and allocating capital to long-term holdings, and also allocating capital to swing trades, you got to join my webinar, the Cash Collector Wealth Protector webinar. This is a free online webinar for anybody who would like to join. Like I said, it's going to be on a online video call. You'll be able to get the link through my Substack. If you just have to subscribe to my Substack, whether you do the free tier or the paid tier. Like I said, the paid tier is $9 a month. The online webinar is happening on March 26th at 7 p.m. Eastern time. So that is like Toronto time and New York time. If you're around this kind of area, then that's going to be going down. I'll leave the links in the description. There'll be 2 links down there. One is for the information about the webinar, and then also linked to the article that we were just going over. So thank you so much for watching. My name's Anthony, and we'll see you in the next one.